Setting financial goals before you start investing. Hello everyone and welcome back to X100%. I'm Eddie, your host on this financial adventure, and today I invite you to join me on a deep dive into one of the most crucial steps before you start investing. Setting your financial goals. Picture this. You're about to embark on a long, winding road trip with endless landscapes ahead. Would you leave your home without a clear destination or even an idea of the journey you wish to take? Of course not. And in the realm of investing, setting clear, meaningful financial goals is just as essential as packing a map and snacks for that long ride. I still remember the day I dove into the world of investing. Brimming with excitement, I rushed headlong into opportunities, seduced by headlines of overnight millionaires and sensational market breakthroughs. But soon, I discovered that every decision made in haste without a clear target was like steering a ship through fog without a compass. I soon learned that the secret to a successful investment journey isn't simply about riding the tide. It's about charting your course with precise goals in mind. Today, I want to share with you everything I've learned about why setting financial goals is not just a trivial step, but the very foundation of every effective investment strategy. We'll break down the components of smart goal setting, share real-life stories of triumphs and pitfalls, and explore strategies that can help you remain disciplined, focused, and resilient, even when the market becomes turbulent. Let's start at the very beginning. What exactly are financial goals? At its core, financial goals are specific targets you set regarding your money and investments. They could range from saving for a down payment on your dream house, funding your children's education, or planning for the lifestyle you envision in retirement. Think of your financial goals as the destination on a treasure map. Without a destination, your hard-earned dollars might wander aimlessly with little purpose. Imagine planning a long road trip. You wouldn't just grab your keys and hit the open highway without a plan. You'd decide on your stops, estimate how long each leg of the journey will take, and prepare for potential detours. In the same way, setting your financial goals gives you a roadmap that not only highlights where you want to go but also reveals the best routes to take. It lets you determine your time horizon, whether you're investing for the next few years or planning decades ahead, and helps you assess your risk tolerance. Are you comfortable taking bold risks, or do you prefer a more cautious, steady approach? Your goals hold the key. One very powerful tool in the goal-setting arsenal is the SMART framework. SMART stands for specific, measurable, achievable, relevant, and time-bound. Breaking your objectives down with these criteria transforms vague ambitions into tangible targets. For example, instead of thinking, "I want to be rich someday," a SMART goal might be, "I will save $30,000 over the next 5 years as a down payment for my first home." With a goal like this, you can track your progress, reassess your strategy along the way, and celebrate milestones. It instills discipline and gives you a clear metric to evaluate your success, a vital element in any long-term investment plan. Now, let's bring this concept to life with a personal anecdote. Several years ago, I had a close friend. Let's call him Michael. Michael was smart, charismatic, and had a natural knack for spotting trending stocks. However, he jumped into investments with enthusiasm but without a solid financial plan. At first, he enjoyed rapid profits and the thrill of winning big. His portfolio was booming, and his confidence soared. But when the market turned unexpectedly volatile, Michael's situation took a sharp turn. Without predefined goals to guide his decisions or a safety net in place, he found himself overwhelmed by the downturn. It was like watching him lose his way in a dense fog without a map or compass. Michael's story taught me a hard but invaluable lesson. Without clearly defined financial goals, even the most promising ventures can lead to financial disarray. So, how do you define these financial goals for yourself? Let's break it down step by step. First, take some time to reflect on your personal values and long-term dreams. Do you want the security of a stable retirement? Are you aspiring to create a legacy for your children? Or perhaps you dream of starting your own business someday. Every goal you set should reflect your personal dreams and the lifestyle you envision for the future. Once you have that clarity, quantify your vision. Assign monetary values and deadlines to your goals. For instance, if education for your children is a priority, figure out the projected costs and set aside funds gradually. Or if starting your own business inspires you, determine the capital required and the timeline you'd like to take to gather that sum. Next, evaluate your current financial situation with honesty. Look at your income, expenses, existing savings, and any debts you may have. This step is crucial because it helps you understand the gap between where you are and where you want to be. Once you have your starting point, you can craft a realistic roadmap to achieve your goals. Another essential aspect is to allow flexibility in your plan. Life is unpredictable. A sudden opportunity might arise, or unexpected challenges might force you to adjust your strategy. Just like a seasoned traveler who adapts to detours, savvy investors refine their goals periodically and remain open to revisiting their plans. Regularly checking in on your progress keeps you accountable and motivated. Whether it's through monthly budget reviews, quarterly investment check-ins, or year-end reflections, make it a habit to assess and, if necessary, recalibrate your journey. Let's now dive a bit deeper into the emotional and psychological side of setting goals. When you set financial targets, you're also building a mindset geared toward long-term success. It's akin to creating a financial North Star, a beacon that helps you navigate through impulsive decisions and short-term market fluctuations. Without this guiding light, it's all too easy to get swayed by the allure of quick gains or the fear of sudden losses. But when you have a well-documented, meaningful set of goals, every investment decision becomes part of a larger, coherent narrative that reflects your aspirations and values. During those moments when the market is stormy and your portfolio value seems to be sweating out your dreams, this emotional anchor can be the difference between making a rash decision and staying the course. Think of it as a protective shield against uncertainty, a constant reminder of why you started this journey in the first place. Let's talk numbers for a second. Suppose you set a goal like saving $50,000 for a down payment on a home within 8 years. With the SMART framework in mind, you'll establish regular savings targets and track your progress. Along the way, you can employ various investment vehicles, from retirement accounts to low-cost index funds, that align with your risk appetite and time horizon. This structured approach not only builds your wealth but also lends a sense of accomplishment as you witness those goals inching closer to fruition. The slow, steady progress becomes a powerful motivator that propels you forward, even when challenges arise. I want to share another story. This time, it's about my own breakthrough moment. Early in my career, I was overwhelmed by the sheer number of investment opportunities available. Every day felt like a barrage of hot tips and speculative advice. I was pulled in every direction until one day, after a particularly volatile week in the market, I sat down for a quiet evening of self-reflection. I realized that while chasing every promising trend, I had lost sight of what truly mattered to me financially. That's when I decided it was time to step back and set clear financial goals. I defined what success looked like for me, not just in dollars, but in the quality of life I aspired to lead. That moment of clarity transformed my approach entirely. With specific goals guiding me, I became more deliberate in my choices, less swayed by market noise, and far more confident in my long-term strategy. And let me tell you, the difference has been extraordinary. Now, while I'm sharing these stories and insights, I also want to provide some practical tips to help you turn inspiration into action. Here are a few strategies to start setting your financial goals today. 1. Write them down and visualize. Commit your goals to paper. Create a vision board if that resonates with you. Seeing your target daily can be incredibly powerful. 2. Break them into smaller, manageable milestones. Large goals can be intimidating. Divide them into smaller chunks so that each milestone achieved feels like a victory on your journey. 3. Automate where possible. Whether it's setting up automatic transfers to your savings account or investing regularly, automation can remove the daily friction and ensure consistency. 4. Seek professional guidance. Sometimes, a financial advisor's insights can be incredibly valuable, particularly if you're feeling overwhelmed by your choices. Don't shy away from seeking advice to keep your goals realistic and well-structured. 5. Evaluate and adjust regularly. Life changes, and so do your financial circumstances. Set regular intervals, say every 6 months, to revisit your goals and adjust your strategy if needed. Let's take a moment to think about why you're listening to this podcast today. Perhaps you're at the beginning of your investment journey, or you might be a seasoned investor looking to refine your approach. Regardless of where you stand, setting well-defined financial goals acts as a powerful equalizer, a tool that brings structure, discipline, and clarity to your investment decisions. It shifts your perspective from chasing momentary trends to building a future that aligns with your personal values and aspirations. In essence, establishing clear financial goals isn't just about accumulating wealth. It's about achieving the life you truly desire. Whether it's enjoying a comfortable retirement, starting a business, or simply gaining financial freedom to pursue your passions, everything begins with clear, deliberate planning. When you know why you're investing, every dollar becomes a purposeful step toward that dream. It's a framework that turns uncertainties into challenges you're prepared to meet head-on. Before we conclude today's episode, let's summarize the key takeaways for you, our valued listeners. 1. You learned that financial goals are the essential roadmap that guides your investment journey, much like a map directs every twist and turn on a long road trip. 2. The SMART framework, specific, measurable, achievable, relevant, and time-bound, transforms vague ambitions into achievable, measurable targets. 3. Personal stories, like those of Michael and my own breakthrough moment, remind us that without clear financial goals, even the brightest opportunities can become chaotic and unfulfilling. 4. Setting and regularly revisiting your financial goals provides both an emotional anchor in times of market volatility and a practical strategy for growth. 5. Practical steps: writing your goals down, breaking them into milestones, automating your savings, and seeking professional guidance can set you on the right path toward achieving your dreams. This is Eddie signing off from X100%. Stay curious, remain disciplined, and let your financial goals be the guiding beacon through every market twist and turn. Until next time, happy investing and keep charting your path to financial freedom.